Hi there, in this video I'll be showing you how to do correction of errors. In this topic you have 6 different types of errors that you need to know. Now for the N-level syllabus you may be required to identify the different types of errors, and then you may be required to prepare the journal entries to correct the error, prepare an updated trial balance based on the adjustments, and for the O-level syllabus you will additionally be required to prepare an adjusted statement of profit. So let's read the question. After preparing his draft financial statements for the year ended 30th April 2015, George discovered the following errors. The first error here is commission received of $600 had been credited to the sales revenue account. If you look at these two accounts, both of them are income accounts. So they are two different accounts, but since they're in the same element, this is what we call the error of commission. How do we correct this error? Okay, you must always have the process of thinking what was done wrong, what was supposed to be, and what is the correction in between that you're supposed to do. So here the first one, the wrong journal entry was the accountant actually debited cash at bank and credited sales revenue. What it should be instead was a debit of cash at bank and credited of commission income. So we're gonna remove sales revenue and introduce commission income. So to remove sales revenue, we will debit our sales revenue here and credit our commission income. Okay, so this is how we do the correction of error for error of commission. Second one, purchase of furniture, which is an asset, costing $3,200 had been debited to the repairs expense account, which is an expense account. Now this is two different accounts, but they are in the different elements. So this is a fundamental error of what we call error of principle. To correct this error, the wrong one was this. Okay, the accountant debited repairs expense and credited cash at bank. So cash at bank, no change, right? Whereas the correct journal entry should have been debited fixtures and fittings and credited cash at bank. So we're going to remove repairs expense by crediting it, and we're going to introduce fixtures and fittings. Okay, so this is how we adjust the error of principle. The next one, cash payments of $250 for advertising fees had been debited to the cash in hand account and credited to the advertising expense account. Now, if you think about it, once you make a payment of money, you should have credited cash in hand, but instead the accountant debited it. And if you paid for advertising fees, which is an expense, you should have debited it, but this accountant credited it. So what was wrong? They totally switched the position of the accounts. So this is what happened, and this is what you should have. So now to correct the error, we're going to flip the accounts. So we're going to write cash in hand. Oh no, we're going to write that. We're going to write advertising expense, and we're going to write cash in hand. Okay, now you might be wondering, why am I leaving the amounts first? Okay, now a lot of students will write this as the amounts, $250 and another $250 here. Now this is wrong because let's just focus on one account. Okay, if I were to have cash in hand debit and then I credit it, so now my cash in hand would have $0, but actually I should have a negative value of $250. So to make it a negative $250, we need to actually credit cash in hand one more time. So we're going to credit of $500. Okay, advertising expense as well. If I just debit one time, I would have just made $0 in the advertising expense. But no, we should have positive $250. So we're going to do it one more time. So this error, we are going to call this the error of complete reversal. Okay, this is the only error where you need to multiply the amount by 2 times. The next error is both the cost of sales and trade payable accounts are understated. Now whenever you see the word understated or overstated, we are going to call this compensating error, because the error of these two accounts cancels off each other. So we are going to look at the process again. So cost of sales understated by 100, trade payable understated by 100. So understated means writing too little. Now we're going to increase it by debiting cost of sales $100. And we are going to credit trade payables of $100 as well. Okay. So keywords to look out for: understated and overstated. Okay, the fifth one, credit sales of $300 was wrongly recorded as $3,000. Now, there's nothing wrong with the accounts here, but the issue is with the amounts. So this is what we call error of original entry. So what was wrong? We wrote too much. Okay, but we should have only $300, so we need to reduce these amounts. To reduce trade receivables by $2,700, we need to find a difference. We are going to credit trade receivables, and for sales revenue, we will debit sales revenue by $2,700. Okay, so sometimes the amounts might be higher or might be lower, so you have to suit the question itself. Last error here is the payment of insurance by cash was omitted. So omitted means that it was not even recorded in the first place. So it's what we call error of omission, okay, without the C. So if you look at the error here, no entry was done, but what you should have is insurance expense $60, cash in hand credit of $60. So since nothing was done, you can just simply introduce these two accounts, $60 and cash in hand of $60 as well. Okay, so all those 6 types of errors that we have identified, the ones that I wrote in bold, are the different types of errors, which answers part A. We also have done the journal entries to correct the errors. These are all in the tables here, correction tables. Now we're going to answer part C, which is prepare an updated trial balance based on the adjustments. So we have the before adjustments, so this is what we have. Okay, now we are going to correct the error. So here, go back to all your corrections. Okay, study them very well. Okay, now we're going to translate these debits and credits into plus and minus. So if we debit sales revenue of $600, we would have actually minus our sales revenue, whereas our commission income, we are going to add commission income of $600 since this is an income account. So sales revenue minus 600, commission income will be addition of 600. Okay, I'm gonna calculate the amounts later on, but let me just delete this first to indicate that we're gonna adjust them later on. Alright, the second one, okay, we actually debited fixtures and fittings of 3,200, so this means we can add it up, whereas repairs expense, we credited it, so we have to minus it away. So fixtures and fittings and repairs expense. Now we don't have fixtures and fittings, so we're going to introduce another account called fixtures and fittings. Of 3,200, and the other one is advertising expense. Was it? Or repairs expense, sorry. We're going to minus 3,200. Okay, so this will be deleted. Next one, number 3, is advertising expense was debited $500. So since it's an expense, we debit it and therefore we're going to add it. Cash in hand, credited. So being an asset, if we credit it, means we're going to minus it. So advertising expense and cash in hand. Okay, So it's done for number 3. Now the next error, number 4. Okay, we debited cost of sales and expense, so we are going to add it. And trade payables, liability, we are going to add it as well. So cost of sales and trade payables. Oh, how much was the amount again? $100. Goldfish memory. Anyway, 100. And the other one is trade payables. Alright, that's it for number 4. Number 5, okay, we debited sales revenue, so the sales revenue being income, we are going to minus sales revenue since we debited it. Trade receivables being an asset, since we credited it, we need to minus it away. So sales revenue, trade receivables, 2007. Trade receivables. Okay, so this is gone, and sales revenue done. And last but not least, we've got insurance expense of debited $60, so expense, debit, plus. Okay. Cash in hand, however, since it's an asset, we credited it, it's going to be a minus, so insurance expense and cash in hand. Okay, so that's done. Now it's time for us to adjust, and we're going to compare and use the amounts here. Oopsie. Let's try and see whether this works. Okay, we can. So to prepare and adjust the trial balance here, using the old amounts. Okay, let me just come back, have all this calculated. Alright, I'm back. Okay, just to make a little minor correction here for error number 6. Okay, I'm supposed to add insurance expense and minus cash in hand. I think earlier on I said that insurance was to be minused, but no, it's supposed to be added. So now that's done, and after calculating, adjusting all these figures, can you see they're all different now? And it's important that you actually indicate all your workings here as well, so that the marker can actually award you marks more easily. So now that I've added everything up, okay, the total I should have both sides is 173,535. Okay, so there you go. Format wise, no difference. So you just make sure you have got your titles, the correct date, and debits and credits on the right side. Now, just to take note as well, for all any adjustments that you have, make sure that the date for the journal entries is on the last day of the financial year. So this one, as the question is given, the last day as 30th of April, so we're going to take that date as the date for error correction. So that's it for me. Hope this clarifies how to do correction of errors. Till then, bye bye.